Hey guys, Chris Haskins with the realestateroundup.com. Once again, here we are bringing you another flip tip. I want to thank you for joining me today. Before I forget, like I always do, take a minute and just subscribe to my channel below and like the content if you got a few seconds, and comment so I can know exactly what trainings to bring you today. I have a little bit of brain surgery we're going to be doing on you. We're going to be talking about buying houses using the subject to strategy. Buying houses using the subject to strategy. Why is this such? This is such a powerful tool in the real estate investor's toolbox. You have to learn this stuff because if you want to live on this side of the line, of the fence, if you will, where investors live, there's two sides to real estate. You have the conventional side. That's where we're going to go. Do a loan application, submit our tax returns, submit our credit report, have a down payment, do a loan application, and all that crap. Get on our knees and beg the lender or the mortgage company to give us a loan. That's the conventional way of doing business or buying houses. Why should you be learning how to do buying houses subject to? Because it's on the unconventional side of the fence. That's where I live. That's where, I want to repeat that, that's where I live. The property that you see me in right now was purchased subject to. A whole bunch of real estate that I bought over the years has been bought subject to the existing financing. Why is that unconventional? Because as Ron LeGrand says, if we don't guarantee debt, I stopped guaranteeing debt probably about 7 years ago. Since I started in 2004, I remember the first time I heard Ron LeGrand say, I don't guarantee, we don't do that in my world. And I just could not believe that there was a world out there. There's a world out there that you don't have to go out there and qualify for loans and you don't have to guarantee debt. Sign me up. Sign me up. That's when I went on my manhunt for knowledge. I was so thirsty for it. The conventional way to buy houses where we're going to get loans, realtor, loan processor, all that crap is going to be limited. Now this is going to be kind of like brain surgery, guys, and you're not going to get this in one day. Now, I promise you, you can't get this in one day, or I can't give all this stuff to you in one session. So this might be broken down into two, but still you're going to need to have some training on how to get for it to get in through to your head that you can actually buy a property without paying off the loan. It's just unbelievable. So this side of the fence is going to be limited. Unconventional or buying houses subject to is unlimited. You can do infinite amount of houses. You can buy infinite amount of houses subject to. Why? Because they don't worry about your debt to income ratio. There is no debt to income ratio on the unconventional side of real estate. All right, so that's what we're gonna get into today. Man, I got so much to give you today. Barron's real estate book defines a subject to transaction. Let's go over the definition of, this is not mine, this is right in the real estate investor's Bible, if you will. Barron's book, defined by Barron's Real Estate Guide, is acquiring a real property with an existing mortgage on it, but not becoming personally liable for the debt. The circumstance in which a buyer takes title to a mortgaged piece of property, that means you're taking ownership, but is not personally liable for the payment of the amounts due. The buyer must make payments in order to keep the property. However, if he defaults, the buyer's equity in that property is lost, or the buyer's ownership is lost also. If you don't make the payments, you don't own it anymore. Now, buying houses subject to, that's our training for today. I'm going to first give you why on earth would anybody even sell you a house like that? Why would they sell you a property subject to? We're gonna get into that. And I'm also going to give you the magic words. And if you want more training, you can download my real estate negotiating audio of actually where I recorded a live negotiation between me and the seller right in the house. I had a recorder in there and they signed off on a release, so I don't get sued, of me actually recording, walking down the person selling me their house subject to. So if you want to get that too, just click the link below. Okay, why would someone do that? I've got a whole bunch of reasons. Why do people sell you houses subject to? Now, subject to is all we're doing to make it real simple. We're going in and we're going to take over the homeowner's mortgage payments, period. That's as easy as I can put it. I do have the Barron's definition, but walking in, the seller has already qualified for the loan. So guess who doesn't have to qualify for the loan? You. They're already on the hook. So all you're going to do is step in and keep making those payments for the life of that loan. Now, people always ask me, well, how long is that? Well, Ms. Smith, I don't know if that's going to be 6 months or 6 years, but our goal, what we will do is make the payments until we have that loan paid off or sold to an end buyer. All right, that's just to come back on that. That's the negotiating. And I love real estate because loans and real estate, they don't go together. Like the two major purchases that you're going to buy in this life is your car, get a loan possibly, and your house will get a loan, right? When you buy a car, the lender goes right on the title of the owner. Well, in real estate, we call it a deed. But in a car loan, the loan or the lien is right on the title. In real estate, the title or the deed is separate from the loan documents, so they don't go together. You can literally transfer ownership of a piece of property without transferring ownership of that loan. So with a car, when you have the title, you pass it on to somebody else, they'll see the loan right on the paperwork there, right? But when you sell a house, that deed just goes whether there's a loan in the house or not. That's one of the great things I love about real estate is you can buy and sell real estate regardless whether there's a loan on it or not. It makes no difference. Now, why on earth would why? People ask me, Chris, I just don't think that a seller would sell me their property and leave the loan in their name. Are you joking? They're gonna sit there and sell me the house and they stay on the hook for me to make the loan payments in their name. I'm glad you asked why. Why would they do that? I've got a few things here. A lot of people do it because they just don't have enough equity to pay the realtor to sell the house in the market. If they owe $150,000 on it, and the house is only worth $140,000, that means they're gonna have to go in their pocket to pay that 6% realtor fee. Once again, it's realtor, not realtor. Where's my gun? I'm putting a bullet in my head the next time I hear realtor. It's realtor. They don't have the money to pay that realtor, so they're gonna they're kind of forced into the box of selling you the property subject to taking over the payments. Another reason that people do this is because they don't have enough time. They're doing it they don't have enough time to do it for sale by owner and wait for people to walk in and out, these picky buyers to come in and buy their property. You're going to offer them debt relief. They have another mortgage payment coming up next month and they don't want to pay it, or they may have two mortgage payments, or they may have already bought a house and they're moving into another house and they don't want to make the mortgage payment where they're at and where they're going to. That's a huge burden on a homeowner to have two mortgage payments. That's a beast. The home could be in bad shape. They just want to shave their credit and move on with their lives. There could be a divorce, death. There's so many reasons why a person would sell you their property subject to. But one of the lines I like to use is, listen, if this is going to keep you up at night, this isn't for you. You know, you can consider me out. The takeaway, right? We'll take that thing away. If keeping this loan in your name is going to keep you up at night, Miss Smith, you can consider me out of it. I don't want to do it. I want you comfortable at night. All right. Now, that's why subject to is so powerful. Why should you be doing this? Why should you be doing this? Because I told you this is unconventional. I'm sick and tired of people telling me, Chris, I got to get my credit right, or I got to save up a bunch of money in order to buy a house. It's just not true. It's just not true. Yes, you do have to have some money to give the seller at the closing. I want you to be giving your homeowners some value for the value that they're giving you. We don't want to have a one-sided transaction. I want you to give them some money at closing. Okay, so there are several documents that I'm going to get to that you have to use when you're putting these subject to deals together to protect yourself. But the reason this thing works so well is because the homeowner has already qualified for the loan. They've already gone out there and done all that stuff on the conventional side that you don't want to do, and I don't recommend you to do. So once they do all that, that allows you to step in and take over those payments. Now, he's already qualified for the loan. He'll be signing ownership of the property over to you, but he keeps liability of that mortgage, okay? I'm gonna repeat that. He's gonna sign ownership over to you. Remember, only thing that owning a house, all you need to own a house is the deed. And for someone to sell you a house, literally, all they have to do is sign your name on the deed and that's yours. You don't even need an attorney. You don't need a title company. I have bought houses at a kitchen table in somebody's house. So you do have to have a notary, which we can get a mobile notary to come into a house, right? But you do not have to have a title company. This big show that the real estate world has created my personal opinion is that they've done that to create jobs for people. You know, I love realtors, I love you guys, but there's no reason a buyer and a seller can't sit down at the table and hash it out and make a deal that's good for the buyer and for the seller, right? What's wrong with that? So I know I don't want to hold you that long. My time is drawing close. We're already at 10 minutes, so let me get right to this. Now, let me go back to what I was talking about before. The reason I love Subject 2, we don't guarantee debt. We don't qualify for loans, no credit report, no tax returns, no loan applications, none of that crap. And we don't want to put houses in our names. You don't want to put a house in your name. I know this might be, once again, I'm doing brain surgery. I can see you right there in the camera, your brain's smoking. How in the world am I not going to put the house in my name? We're going to get to that, all right? So this is part 1 of Buying Houses Subject 2. I can't get it all in. I'm going to probably be 30 minutes just barely getting the tip of the iceberg, explaining to you how Subject 2 deals work. Now, what we're going to do next, I'm going to walk you through the documents and what they mean, so we can, when you sit down with your seller, I want you to be covered, and I want you to make sure you explain yourself to your seller so they don't think you're out there trying to scam people. You want to be professional when you sit down with sellers. All right, so let's move into the documents that we need to actually get a Subject 2 deal closed out. All right. So the first document you're going to need is going to be the authorization to release information document. You got to have that. As a matter of fact, I don't even meet with people. Before I meet with people that I'm going to do a Subject 2 deal with, I make sure that they have their bank statements there when I get there. Okay. So you got to have information when you show up. Like, so many people, my coaching clients around the country, are asking these questions. What are the monthly payments? How much is owed on the loan? What are the arrears? You have to know these things when you start, because if you find out that the guy's 20 grand in a hole in payments, it's going to be challenging for you to do a Subject 2 deal, because you have to make the payments and you have to bring all those arrears current. So why waste all that time negotiating the deal and then come to find out he's $20,000 behind? So you have to get that information. If he doesn't have the bank statement, then you're going to need this authorization to release information document. You got to have it. The reason why is because nobody in America is going to be able to talk to another person's lender. Say, for instance, when I sit down with Mr. Seller, I'm going to say, hey, Ms. Smith, Mr. or Mrs. Smith, we want to take your property over. I got my magic words. I've already done everything. So I call her lender, right? Let's say it's SunTrust or Ocwen or whoever. Ocwen's not going to talk to me. They don't care about me. They're going to say, well, who the hell are you? And why are you calling for Mrs. Smith's loan? You have to have a document linking you up to the seller. So what happens with this authorization to release information, it allows you to speak on behalf of the seller about their loan only. It allows you to speak on behalf of the seller when you call the bank. So you fax this document over, so you can actually find out, or what we call it, verify. Larry Goins always said, trust but verify the information that they tell you. So this authorization to release information is going to allow you to talk to the bank on the seller's behalf to verify monthly payment, because we're taking it Subject 2. We have to know what the monthly payment is, right? You got to. And we want to know how much they're behind in the loan, if at all. And exactly how much do they owe? Do they owe $1 million? That authorization, and I'll see if I can put one on the screen for you to take a look at. This is the first document, the very first document that you need.